Basil Chapman, what's going on?
Hi, Tom. How you doing there?
I'm doing great, man. Yourself?
Good. We actually got some rain for it. We had a bit of a drought actually for most of the summer, so we got some rain now. That's good.
Cool. That's awesome. That's awesome. So, market-wise, what do we have here? I got your charts up here. Let's take a look at them.
Yeah, so on the left, I've got my daily chart. In the middle, I've got the weekly. On the right, I've got the monthly. This is the Dow. The Dow has made the patterns that I look at all the time, and they repeat in the market. I wonder if I can just find it here. I'll just show it. I'll get it there. I'm always looking for certain patterns that repeat, and I'm finding it right here. There it is. So I'm only looking at three patterns: straight up, straight down, cup formation, and an arch formation. In the arch formation, you combine the straight down, and then you roll over, and if you take out that left side low, it looks like a lowercase h. You can keep going down. We've seen that in sell modes. That's what we see. Or you can even make another arch, which is like an M. I'll show that in a little while. It's a lowercase m pattern on the right. If you take out the left side high in this cup formation, it can go higher. So that to me is really important. There are a bunch of other techniques that I discuss on my show. In fact, the last couple of days I've had some demonstrations of some of the techniques. Now, what we're looking at is in the Dow, there's this cup formation. The high was 29,199 on the 3rd of September, and we came down sharply to 26,537. And then the stochastic and on-balance volume all gave nice signals to turn up, and the MACD turned up. We've actually been long since started long March the 23rd, the day of the low, and we also have diamonds that we bought on the, I believe it was at about 20,990 in the Dow. That was around about April the 3rd, and we've still got those. And what we're anticipating now in the Chapman Wave methodology, another technique that we use is we're always looking for the fourth highest peak. So what happens is if you identify a key low, you count each successively higher peak and alphabetize them sequentially on the way up all the way to a G. But it's that fourth highest peak. A is 1, B is 2, C is 3, and the fourth is D. D is where other things can happen. Yes, you can keep going high. Just here in the corner, you can see the daily chart went to a D in the Dow, and it went then to an E and then an F. But at D is where we raise the foot off the accelerator, hover over the brake, make some decisions. So what I've said to subscribers is, as we're getting closer, we've gotten to a leg C in the Dow. I'm anticipating that there should be a pullback today, and that's what we've gotten. That's that makes it a peak C. Then above 28,957, there should be another leg up anytime this week, and that should take us to D. And D is where I start to make decisions about what's going on. But the last high of 29,199, that's kind of the target area. It doesn't have to get there, but that's the target area. And you can see the cup formation in the weekly chart with the MACD still strong. Stochastic's improving. Monthly chart is still in leg B. So that's the Dow. We were very fortunate on that. Was it a week ago when I was speaking to? Yes, last week. You remember on Tuesday, there was that sudden sharp sell-off? Was it last Tuesday or Tuesday? The days are melding into one another.
Yeah.
Anyway, there was this it was last Tuesday. So the IWM, the Russell 2000, it was much higher in the morning before my newsletter, the opening call went out at about 8:15. The futures were much higher. The IWM was much higher. But I said, I like this very much. I think the IWM is this rotation as the tech stocks are taking a breather. I think that this is a sector that could improve quite a bit. So I had all these different techniques that we were talking about, and I said, let's put in a bid, a really low bid. We were very fortunate on that pullback. We managed to get it. So we're in from the 6th of October, and look at this nice move that's gone up. So it's gone also to a peak C today, and I'm anticipating a leg D. So in my show, I think it was today's Tuesday. Yeah, last week I was showing how this works with the Chapman Wave parallel one-to-one extension, where we should go. I was also talking about a pattern that I talk very often, which is I call it the falling axe, just to kind of give it a nickname, but it's really a declining cone. So what you see is the price goes up and keeps bumping against resistance. Then it makes either a D, E, or F top, starts to make lower highs and much lower lows, and then it suddenly forms a base and it turns around. The next thing you know, you've got either a V or a cup formation. And if the price takes out from the low to that declining trend line, you can get a 1-to-1 to the upside. And the exciting thing about this particular technique is that it could be in a parallel sequence. It means that you've got the same number of bars going to the upside in this particular movement. So that's what I was drawing in over there. And I always start off very conservatively before I give the full extension. But so far, that's working out. And there's the weekly. It's the same pattern. So we've still got our long positions. We added. We're trying to build a little bit of a kitty with cash, but at the same time, instead of getting high price stocks, if the chart formations work, we're trying to get very low price, like single digits price stocks that really have good quality to them. Try to get in so that we can still conserve cash and have a very nice position, because if something's going up, it's nicer to have something that's at $7, $8, $9 than 70 or 80 or 90, because if the percentage is the same, at least you're conserving some of that cash. So that's important to us. And so we've had some success with that. One particular one today turned around exactly the way we wanted. And in fact, it's up very sharply today. I call these screamers, because when they work, when they're single digits, they give very nice percentages on the upside. And so that's what we're trying to go for here. So
yeah, and what has happened in this market, it's almost like 2000. If you can get a screamer, you can get the rest of all the day traders on board pretty quickly.
Especially if they recognize it, especially if it's a name that kind of is out there, and then they just pile on. And then, the market, I say a game, not in the worst sense, but in the best sense. Because it takes a lot of sophistication, takes a lot of experience. We're always learning, but at the same time, you have to understand the modus operandi behind some of these things, and I think that makes a difference. So, I've spoken to you about sometimes we have very short-term trades could last minutes and sometimes a long time. We're still in the dollar all the way from April of 2018 at 90.07 using the UUP fund. It screamed all the way to 103, and then it pulled back sharply. Now it's having a nice move. It's actually holding quite nicely. So we'll see what happens with the dollar.
Folks, come over to our website at TFNN. You're going to go right into featured content. You're going to see the opening call right there. You just hit subscribe. Basil, you have a great one, safe one. We look forward to the program tomorrow.
Thank you very much, Tom. You too.
Thank you. Stay right there, folks. Dow down 100, NASDAQ up 29, S&P's up 20.